Hi everyone. Good evening. Hope I'm audible.
Yeah.
Okay. Yes. So hi everyone. So today's session is going to be a bit more basic about the compliance and tax for founders. Like maybe like what is GST, like what is TDS, explaining those concepts in a very simple manner. It's more of a kind of related to the compliance and all those things. Okay. So I'm jumping straight into the topic. So what we are going to cover today. So the first thing is like what is GST for startups? Like what is the registration limit? What is input tax credit? What are the typical mistakes people make when they uh, file or like when they uh, work with GST? So those things would be covered in the first segment. Then we'll discuss about TDS. Like most of you might have heard about TDS, have got experience either deducting or being deducted by TDS and all those things. So we'll explain like what is typically TDS, what is the concept of TDS, what are the standard rates for TDS in different service categories, and all those things. Then in the third segment, we'll be discussing about tax planning, like legal ways to reduce your tax burden. So what are the few couple of benefits that we can avail, and like how to do that, and the final Q&A sessions, what we typically do at the end of every session. Okay, so this is going to be the flow of today's session. Yeah. So first segment is GST for startups, like I've told. So do you even need to register? So typically, like the question what I always get from founders is that whenever they start a business, they believe that they need to register to GST, but there actually is a threshold limit for businesses to get registered under GST. And there are few conditions wherein they need to get mandatory registration as well. So I'm just discussing in a nutshell about like what are those threshold limits and what are the mandatory conditions wherein you need to get registered for GST. Okay, so the first thing is if you are in the business of goods, that if you are doing trading or manufacturing, in that case the GST registration limit is 40 lakhs. If you are doing service business, like you are a consultant or you are a software company or something like that, in that case your limit is going to be 20 lakhs. And this is annual limit, okay? This is annual sales limit. And for special category states, Northeastern and Uttarakhand state, it's 10 lakhs. So this is across all your PAN number. So for example, if you're doing a proprietorship business, you'll be having only one PAN. But you have a hotel business, you have a renting business, you have a trading business, then it's collectively this 40 lakhs or 20 lakhs that is going to be applicable. Okay. So the moment you cross 40 lakhs or 20 lakhs or 10 lakhs, as the case may be, you are liable to get registered to GST. And once you are registered, then in the next year, you don't get this benefit of 40 lakhs or 20 lakhs. In the next year, from the day one revenue or the first 1 rupee revenue that you make on April 1st of the next year, from that onwards, the GST would be applicable. Okay. And there are few mandatory conditions also for GST registration. First is like if you are doing any interstate sales. Okay. If you're doing interstate sales, then the GST registration is mandatory. If you're selling on e-commerce platforms like Amazon, Flipkart, Meesho, etc., GST registration is mandatory. And if you're liable to pay tax under reverse charge mechanism. So I'll just explain to you what is reverse charge mechanism and what is forward charge mechanism. For example, if I am a consultant and I am raising an invoice to a company, suppose I'm raising an invoice of 1 lakh plus GST. So the invoice is going to state 1 lakh plus 18% GST, 1 lakh 18,000, and the client has to pay me 1 lakh 18,000. But in reverse charge, how it's going to happen is that I'll be issuing the invoice only for 1 lakh. Now the client has to calculate 18% GST and pay that 18% GST to the government from their hand. Okay. And they can take the input tax credit of that. So I'll explain to you what input tax credit is. But just understand that Reverse charge mechanism is mandatory for few cases. Like for example, if it's a lawyer, if you're availing services from a advocate, in that case, the advocate won't be giving you a amount plus GST. They'll just giving you a 1 lakh invoice, but you are liable to pay a GST. In that case, you need to get mandatory GST registration. Okay. So these are the main conditions. Now we'll go to input tax credit. So input tax credit is actually a very kind of helpful tool, and like kind of it would help you to manage your cash flow and even make more profit in the business, I would say. Okay. So input tax credit is a GST paid on purchases. Okay. So in a business, if for example, just imagine the kind of business that I'm into. I'm into consulting business. Okay. So whenever I invoice a client, I give them an invoice of 1 lakh plus GST, which is 1,18,000, and the client gives me that amount. That 18,000 GST for me is an output tax because that is on my sales. Similarly, if I have engaged with another consultant in my company to get the works done on my behalf as an outsourced agent, and they are giving me an invoice of say 50,000 plus GST to me, in that case, I want to pay him 50,000 plus 18% GST, 59,000. Okay. That 9,000 GST is called input tax credit. Okay. And whatever amount I want to pay to the government, it is actually net of the input tax credit. So now in this case, I'll be paying the government 1 lakh plus, 1 lakh 18,000 minus 9,000 rupees I'll pay to the government. But my client has given me 18,000 rupees as GST. But since I've already paid 9,000 to another person, I am liable to pay only 9,000. Now, how you're making profit from this? Okay. So if you don't have a GST registration, just assume I don't have a GST registration. So my invoice still would be like 1 lakh plus 1 lakh is my invoice. So I'm getting 1 lakh rupees from the client. Okay. But I want to pay to my outsourced or my consultant. He has a GST registration. So he'll be still giving me 50,000 plus GST. 59,000 is going to be his invoice. I still have to pay him 59,000. My profit becomes 41,000. I don't get any benefit there. But just imagine the other case. I got 1 lakh from the client, plus I got 18,000 also from the client. Okay. And now I want to pay 59,000 to this person. And now I am paying net of 9,000 to the government. So typically it's like 1,18,000 I've got. From that I have paid 9,000 to the government net amount, and I have paid 59,000 to the consultant. What is remaining with me? It's 50,000 rupees. So my profit is 50,000 here. Okay. In the other case, it was 41,000. That GST amount became our expense. So that's why how when we take GST registration, a lot of these things would be coming into place. And even in a consulting business, at least 20-25% of your expense or asset purchase would be having a GST element, which you can actually make use of and manage your cash flow accordingly. Okay. So again, I've given a simple example here. 1,80,000 is the GST collected on sales. 70,000 is the GST paid on purchase. The net amount is 1,10,000. Okay. So you save 70,000. That's the money that stays in your business. Okay. Claim every rupee you are entitled to. Unclaimed ITC is equal to money left on the table. Like I've told in the example earlier, you'll be making a extra loss of 9,000 rupees if you don't avail that benefit of GST input. Now ITC, what you can claim and what you cannot claim. So you can claim ITC on raw materials and direct inputs, office expenses and supplies, software subscriptions, professional and legal services, then equipment used in business operations. So in these cases, you can claim GST input. There will be other expenses also, but there are few negative list of items where you cannot actually claim GST input. One is food, beverages, and employee meals. So that is an actually prohibited item. So even if you are having a client meeting and you had food, the people would be charging you 5% GST. You cannot claim that GST. Okay. Then employee cab or personal travel, for that the GST is not permissible. Then construction of immovable property. So if you are constructing an office building, in that case also there will be a lot of GST coming into place. So that also you cannot claim unless and until you are into the business of real estate and constructing and selling properties. Then motor vehicles, for example, if you're buying a car, even though if you're using it for personal use or if you're using it for Only for business use, that doesn't matter. You cannot claim the input on motor car. Even any services, any expense associated with the motor vehicle. For example, if you're taking the insurance, if you're doing a service, workshop or body shop, anything, whatever it be, you cannot claim the GST unless and until you are in the business of dealership or maybe like driving school, where that actually that car or that asset is going to be a proper asset used in the business. Then items used for personal or non-business use. For example, you buy a refrigerator in your home or you buy a washing machine at your home. There will be GST, but you cannot claim that. That's not actually for your business. Okay, I hope this is clear. Then 5 GST mistakes founders make. Like first thing is not registering on time. This I have seen quite often. People come to me after 2 years or 3 years and tell that we haven't taken GST. By the time their turnover would have crossed like enough crores. So what happens is like you'll have to pay a lot of penalty and you'll have to calculate the tax from the moment you cross this 40 lakhs or 20 lakhs threshold. Then there will be interest, penalty, everything would be there. Then missing input tax claim. So like I've told people, there is actually a report called GSTR 2B where you can see all the inputs that you have received. Or maybe like you have purchased an item from maybe a TV for your office from a vendor, but they have not filed their GST on time. In that case, this input will not be reflected in your 2B, which means that you are not eligible to take that input now. So you will have to follow up with that vendor and ask them to file, then only you will get the input. So that way, like you should be actually having a track of whatever input claims you are having and whether these have been properly reflected in your 2B return. Okay, that is something what you need to do. Then wrong HSN or SAC code, like these typically like attract. I mean, when the wrong HSN or SAC code is chosen, maybe the tax rate can change. Otherwise, it's a disclosure mistake, and for that also like there can be a penalty. Then not reconciling 2B, which I've already told. Claiming ITC without verifying GSTR 2B, risk of reversal. For example, you have purchased something, say 1 lakh plus GST worth item from somebody and they have not filed the GST in the example which I told earlier. Okay, so in that case, if it has not been reflected in your GST 2B, you cannot take the credit there. Okay, so what is going to happen? Now, if you have taken that credit in your 3B, you are going to get notice. And for example, if that vendor is not going to file, they became bankrupt or something, then you will be asked to pay the that extra GST with all the interest and penalties from whatever date you have availed that. Then treating RCM as optional. So RCM is a statutory obligation. It's not an optional thing. For the expenses which have mandatory RCM applicability, you need to pay it on RCM basis. For example, I told the lawyer expense. So if you have a lawyer, then the lawyer gives you bill without GST. You need to pay the GST on top of that, and then you can claim the input tax credit on that. So that is how it works. So in that case, you need to make that mandatory payment. Then GST return calendar, like these are the main returns under GST. So typically, like we have GSTR1. Everybody has to file. The due date is, it's a monthly or quarterly return. The due date is 11th on month or 13th on every quarter. Then we have GSTR 3B, wherein we pay the tax. That's a monthly return. Again, 20th of the following month is the due date. Then we have GSTR 9, wherein it's an annual return. You have to file it on an yearly basis. The due date is 31st December. Then we have GSTR 9C. If the turnover is more than 5 crore, it's a yearly reconciliation. Then in that case, you have to file it again on 31st December after the year end. So late fee is rupees 50 per day or rupees 20 per day for nil returns. If you are not having a nil return, it's going to be rupees 50 per day. Then there is going to be an interest of 18% per annum on the outstanding tax amount. Okay, hope this is clear. Now we'll move to the next section, TDS. If anybody have any questions, you can ask in between. Or we'll take all questions towards the end. Okay, so what is TDS and why you should care? So TDS is tax deducted at source. So you deduct tax before making a payment and deposit it with the government. Okay, so I'll just briefly explain to you what is the concept of TDS and how TDS is actually becoming a helping tool for government. So TDS is actually a two-way mechanism. Okay, for example, now I am availing service from a an advertising company. For an example, I am availing service from an advertising company. The TDS for advertising services say 2%. So the amount I have to deduct from the invoice is say 1 lakh is the invoice amount. I have to deduct 2%. I deduct 2%, 2,000 rupees. Then I pay them 98,000. Okay, all good now. So I'll tell you what the concept is. Now, if I don't deduct this 2% and pay it to the government, I am not supposed to claim 30%. I'll get this one disallowance of 30% of this expense, which means that in my P&L, when I am able to show an expense of 1 lakh for advertising, I'll be only able to show 70,000 as advertising expense. The 30,000 should be disallowed. So what happens? My tax liability increases because my profit increases. Why? Because my expense have decreased. Okay. So in that case, will I deduct and pay the TDS? Obviously, I will deduct and pay the TDS because else I will have to pay more tax to the government. Plus, I will have to pay the interest and penalty on TDS disallowance. I mean TDS non-payment and all those things. Now, from the advertising company angle, now since I have deducted and paid the TDS on behalf of them, this will be reflected in their 26As or in their income tax portal. So by that way, their income is disclosed there. Because I want to claim expense, I'll deduct this. Now it is reflected there. So it's actually a two-way mechanism for government to restrict people from showing fake expenses. So if I want to show some fake expense and reduce my profit, I cannot do that. I'll have to pay TDS on such expenses. And when I save TDS on such expenses, that is going to be somebody's income. So always remember that one person's expense is the other person's income. So for the other person, this is going to be an income. And if I simply without having any expense, if I claim an expense and deduct TDS on some other person, they will come and tell that, why have you deducted TDS? I haven't given you the service. So that's a two-way blockage. And for another way, people reduce their taxes by showing less income. Now the advertising company cannot show less income. Why? Because I have already deducted TDS on their 1 lakh and this has been reflected on their portal. So this is a two-way mechanism. For me to claim the expense, I have to deduct the TDS. And in that way, the advertising company or the person who has given me service, their income is also disclosed to the government. Okay. So now as a founder, you are responsible for deducting the correct TDS amount, depositing it with the government on time, filing quarterly TDS returns, which is 24Q or 26Q, then issuing TDS certificates to the vendors. So these are your responsibilities. What are the non-compliance consequences? Interest at 1 to 1.5% per month. Penalty equal to TDS amount. 30% expense disallowance in your P&L, which I have already told. Prosecution in serious cases. Okay. Now let us look at few day-to-day examples of TDS and what the percentage is. So we have something called 194C, which is for contractors and freelancers. The advertising and everything comes under this section. So the rate is 1% if the person providing you the service is an individual or a individual. If not, then it's 2%. The threshold is rupees 30,000 for a single transaction and rupees 1 lakh per annum. Then we have 194J, professional or technical services. The services which I am doing is actually a professional service. For that, the TDS is 10%. The threshold limit is 30,000 per annum. Then 194H, we have commission or brokerage, which is 5%. So if you are providing brokerage to somebody, you will have to deduct TDS at 5% for them. Then you have rent. If it's plant and machinery, it's 2%. If it's land, building, etc., then it's 10%. The threshold limit is 2.4 lakhs per annum. Then we have salary to employees. So for salary, there is no specific TDS rate. It's based on the slab rate of the employee. So if an employee who is having 20 lakhs salary and their annual expense is going to be, say, annual tax is going to be, say, 1.5 lakhs, you have to deduct 1.5 lakhs divided by 12 every month. Okay. Now, TDS in action, a simple example. So scenario, you hire a freelance designer and agree to pay rupees 50,000 for the project. So section 194J applies, which I've told you already. So 50,000 is the invoice received. You deduct 5,000 TDS, which is 10%. Then 45,000 is paid to the designer, and the remaining 5,000 you pay to the government. So for you as a founder, there is no cash flow saving or anything, or you are not paying anything extra. Anyway, you will have to pay 50,000 to the designer, but you are paying it in two parts, paying 45,000 to the designer and 50,000 to the government. Okay, the designer gets credit for those 5,000 rupees in their 26 AS, which they can set off against their tax liability. So, for example, if the designer is going to pay like kind of 1.5 lakhs tax for that financial year, this 5,000 will get reduced, and that from that 1 lakh tax, and he'll be required to pay only 95,000. Then TDS deadlines and consequences. It's 7th of every succeeding month. For April month, you have to pay on May 7th. For May month, June 7th, like that. And for March alone, you have to pay on 30th April. Okay. Then return filing, it's quarterly on 31st of the next month, or the last day of the next month. So it's 31st July, 31st October, 31st Jan. And for March quarter, it's 31st May, because the due date for payment is 30th April. Okay. So the interest on TDS is 1% per month for non-deduction. For non-deposit, you have deducted the TDS, but you haven't paid, then it's 1.5% per month. Then rupees 200 per day if you delay in filing the TDS return on a quarterly basis. Then the 30% expense disallowance, which I have already told you. Okay. Now let us go to tax planning. So legal ways to reduce your tax burden. I mean, don't expect too much from this part. I'll be just explaining some few things. Like, don't expect that you'll be able to save so much of tax. For that, like we need to understand your business. Figure out where all we can do some structuring and all those things. So firstly, what you need to understand is the difference between tax planning and tax evasion. Okay. So tax planning is using the provisions of law to legally reduce your tax outgo. For example, claiming eligible deductions like 80 IAC, 80 JJ, etc., 35, section 35, etc. Then timing of income and expenses should be proper. Structuring founder salary from the company. Accelerated depreciation on qualifying assets. Choosing the right tax regime. Okay, so these are a few ways wherein you can actually do tax planning. Okay, but what is tax evasion? It is hiding income or inflating expenses. That is illegal. That is not permissible. Okay, so what people do to reduce taxes under tax evasion is that not reporting income. Then fake expenses, invoices or bogus expenses. Claiming deductions without eligibility. Cash transactions to avoid a paper trail. And also attracts prosecutions plus heavy penalties. So typically when I used to do individual ITR a while ago, so I've seen a lot of consultants claim that we will get you this much amount of deduction, this much amount of tax refund. For that you pay us this much amount of fees. And there are few clients who have come and told me that, okay, this person has told me that he'll be giving me this much refund, so I'll do with it. I told him, okay, you go and do with them. See, the thing is they are using some other ways, like they are simply showing some bogus claims and reducing the tax burden. So the confidence what these people have is that at least in India, around 99.5% of the tax returns get processed as it is. The government believes that its citizens are honest. But there is a 0.5% wherein there is scrutiny and everything. But what if some scrutiny or something happens on such cases? So even if it happens or does not happen, you have to be honest and you have to file the tax and everything with the legal provisions of the law. Because the law itself gives you a lot of benefits and a lot of loopholes wherein you can actually make the best use of it and make it to your benefit. Okay, so in that scenario, going for a tax evasion is something which is very, very, very kind of bad. And with the current kind of automation and everything, with a lot of transactions being digitized, like UPI coming into picture, and a lot of technological advancement, even with the upcoming of AI and everything, the tax authorities will also be very for the tax authorities, it is very easy to kind of evaluate your return and identify whether you have done any fraud or anything. So don't go for such things. Let us do what is legally permissible, what we can plan and do. Okay. So that's the difference between tax planning and tax evasion. So tax planning is something wherein you are using the provisions of the law legally to reduce your tax liability. Whereas tax evasion is you are reducing the income. You're eliminating some income. You're not disclosing some income. Or you are increasing the expense. You're showing like salary of 50,000 rupees per month is there, but there is no such employee. You're simply paying 50,000 and like kind of transferring it to someone else. Or maybe like kind of your um, close friend's name, something like that. Or maybe like kind of you are showing a cash expense of say 10,000 rupees. So that can also trigger the questions. Okay. So first thing is section 80 IAC. So I have to say this to everyone. So typically people have a common misconception that when you have a startup registration certificate, that is a DPIIT certificate with the government or from the DIIPP portal, they believe that they have a tax holiday of this 3 years. That is completely wrong. So startup registration is just a recognition that you are a startup. For having the startup tax holiday, you need to obtain another certificate. And that section which covers that exemption is section 80 IAC. Okay. So eligibility, this is an inter-ministerial board certificate, like multiple ministries are involved. So you have to apply it online on another form. There is a form, I don't remember the name, I think it's form 2 or something. So you have to fill in that form, and after scrutiny only you will get that registration done. So I'll just tell you a simple math. So a while ago when I was checking, like the total number of registered startups in India is around 210,000 or something. But the company number of startups who has got startup exemption or 80 IAC is somewhere around 6,000 range. You just imagine the difference. One thing is that mostly people doesn't know that 80 IAC has to be taken separately. So that is there. And second thing, in the 80 IAC thing, the government level of scrutiny is much higher. Because the other thing is just recognition. You are not getting any tax benefit. Government is not foregoing any tax. But here, the government, since the government is going to forego the tax, their level of scrutiny is much higher. So what the section 80 IAC says is that it gives you 100% tax reduction on profits for 3 consecutive years out of the first 10 years of incorporation. So you can choose the best 3 years, best 3 consecutive years. Maybe in the first couple of years, you'll be making loss. In the next 3 years, you'll be making small profit. And that's when you realize that, okay, now my profits are going to jump. You can avail this 80 IAC benefit in that next 3 years. Okay. So what happens is that you needn't pay any tax on that profit for that 3 years. This is actually very, very, very good benefit that the government is giving. Jagdish, I think we'll take the questions towards the end. Okay. So that's the thing. So what are the eligibility conditions? It should be incorporated as a private limited company or LLP. It should be recognized by DPIIT as a startup. Okay. So firstly, you need to take the startup registration, then you need to apply for this 80 IAC. Then annual turnover should be less than 100 crores in any year. Not formed by splitting up an existing business. Then interministerial board certificate is required. Okay. So that is the 80 IAC exemption. So I have highlighted that 12.5 lakh. I mean, that's just to attract your this one. Attention. Nothing like if you are making 50 lakhs profit in 3 years at a 25% tax rate, you would be saving at least 12.5 lakh rupees. But if you are making more profit, the savings is much higher. Okay. So apply for the IMD certificate early. It's not automatic with DPIIT. Plan before the 10-year window closes. So for those who already have a startup registration or startup recognition certificate, if you are within 10 years from your incorporation date, you can apply for this 80 IAC now also. Okay. So it should be within 10 years. That's the only thing. So that is about 80 IAC. Now, more tax planning levers, few other things are there. Section 80 JJAA, hire more, pay less tax. So this section allows 30% additional deduction on new employee salary cost for 3 years. So if the employee salary is less than 25,000 per month and they are employed for minimum 240 days, then you get a 30% additional deduction. Just look at this example. 5 new employees at 20,000 per month. Okay. So it's going to be 12 lakh salary cost. So it's 20,000 into 5, 1 lakh, 1 lakh into 12 lakh. So there is a 30% deduction which you can claim extra. So this 12 lakh is already going to be in your P&L. It's going to be shown as an expense. You're going to save tax on that expense. Now you will get another 30% additional reduction, which is going to be 3.6 lakhs. And the tax saving is at 90,000. If you're a company, the tax rate is 25%. Plus cess, it's 26%. So somewhere around 95,000 you'll be able to save in that case. Okay. Then we have accelerated depreciation. Computers and energy saving equipment attract 40% plus depreciation. Front-loaded reductions in early years. So that's again like kind of what you need to plan and like kind of claim your depreciation properly. Then founder salary structuring. So this is another important thing what we can do. So just understand the tax structure in India. So for companies, it's flat 25% plus 4% cess, it comes to 26%. That 4% is on 25%, so 1%, so it comes to 26%. For LLPs, it's 30% plus 4% that cess, 31.2%. For partnership, it's 31.2%. But for individuals, we have a slab rate structure. So until 4 lakhs, you don't pay any tax. 4 to 8 lakhs, 5%. 8 to 12 lakh, 10%. So whatever it is. So after 24 lakhs, you would be paying 30% of the whatever income you are earning above 24 lakhs, you will be paying 30%. Okay. So for example, if you are and above 20 lakhs, you will be paying 25%. So just imagine if you are a private limited company and you are having a profit of 1 crore rupees. The founder hasn't taken any salary. Okay. So what is the if the founder is not taking any salary now? Okay, what is the tax for that company going to be? It's 1 crore and 26%. So it's going to be 26 lakh. There's going to be a bit of surcharge. I'm not telling about that now. So it's going to be 26%. So it's going to be 26 lakh. So the net amount with the company in hand is 74 lakhs. Okay, fine. Now, if just imagine this is a closely held company, like you and your relative is in the company, or you and your friend owns the company, and you want to save some money. Just imagine there are 2 founders, and for these 2 founders, you put a salary of 20 lakh rupees each annually. So what is going to happen? 1 crore profit becomes 60 lakhs. How? 20 lakhs one person, 20 lakhs another person. So now you will be paying tax of 26% only on this 60 lakhs. So on 60 lakhs, when you pay 26%, what is the tax amount going to be? It's going to be 15.6 lakhs. So it's going to be the net amount what the company would be having is 44.4 lakhs. Now let us consider these founders individually. For 20 lakhs, what would be the tax that they would be paying personally? It would be in this slab rate. So until 4 lakhs, it's nil. 4 to 8 lakhs, it's 5%. So like that. So somewhere around say 2.5 lakhs they are paying, let us assume. So 2.5 lakh founder 1 pays and he gets 17.5 lakhs. Then the other founder also pays 2.5 lakhs, and I need to do the exact math, but I'm just telling some random numbers now. So he also gets 17.5 lakhs. So what is the total amount left with the company and the founders? It's 44.4 lakhs plus 17.5 lakh into 2. So another 35 lakhs. So 44.4 plus 35 is 79.4 lakhs. So in the first case, it was 74 lakhs. Now it's 79.4 lakhs. So in that way, you'll be able to save taxes. So just understand that individuals are taxed in a slab rate manner. The company and LLP and partnership firms are taxed in a like kind of flat manner. So Pradeep, I'll take the questions towards the end. Then R&D, like kind of we have 100% reduction on in-house R&D expenditure, highly relevant for product-led and tech startups. So that is also there. That's another benefit what we have. Now I'll just summarize what I've told now, and then we'll move to the Q&A sessions. Like I already have a couple of people asking questions. So first thing, like register for GST on time. Don't wait for a notice to arrive. If the notice comes, the penalty, interest, and everything is going to be very huge. Okay. Then claim every rupee of ITC you are entitled to. Reconcile GST or 2B regularly. Then TDS is not optional. Deduct, deposit, and file on time every time. Then tax planning starts at its incorporation, not at year end. So if you're planning for tax, plan like once you incorporate, or I mean at that point itself. Don't after 31st March, don't go to your CA and ask him during September, can I reduce tax now? So don't ask such questions. If you want to plan tax, plan it early. If you are DPIIT registered, recognized, apply for ATAC. It's free money you cannot afford to miss. So like I've told, there is a misconception that who have startup in their recognition automatically qualifies to the 3-year tax holiday, but that is not what is happening. You need to obtain it separately. Yes, now over to the questions. So I've kept the link to join the WhatsApp group as well. So Pradeep, you can ask your question. You can unmute yourself and ask.
Yeah, sure. Thanks a lot, Abhijith, as usual. I mean, very insightful, presentation. So, I mean, we are not yet, GST registered, but because we are changing the address, location, and so on. But another thing is, so it is related to the, the last slide before the overview you submitted, presented, right? So, if we and we have not yet also
Can you just
officially
give me a
hired.
second? Just give me a second. Just give me a second.
Right.
Yeah, sorry. I had an urgent call to take.
Yeah. So my question revolved around the like the employee salaries and also the founder's salary. For instance, we are not yet revenue generating. We are just entering in like next 1 to 2 months. We'll be there, and can we also apply for these tax deductions, like you mentioned, for the previous years?
But no, like it's for the going for the upcoming years. Once you register, only you will get the exemption.
Okay, for all of the, processes, right,
I
including
mean,
the 18.
as per my understanding, or like kind of, I mean, in general sense, there is no retrospective effect for these any sort of these tax
I
exemptions. Yeah.
see. Okay,
Yeah.
all right. Yeah, thanks a lot.
Yeah. Okay, Pradeep. Yeah, Jagdish, you may ask you this now. Hello. Jagdish, if you can unmute yourself and ask the question.
Okay. Thanks, sir, Abhijith. My question
thank you.
was related to the tax exemption offered 3 years holiday. So I just want to know that let's suppose if someone has applied for a ATIC and he got the certificate successfully, then also MAT is applicable, or then MAT will be not applicable?
MAT will be applicable, but why I'm not discussing about MAT now is that it will make it a bit complicated for others.
Okay.
So MAT is applicable. Yeah.
Okay, got it. Thank you.
Yes. Yeah. Thank you. Does anyone else have any question? If not, we'll wind up the session, and we'll keep you posted about the next session. Okay. So thank you, everyone. Thank you once again for joining the session.
Thank you.
So we'll keep you updated about the upcoming sessions. If you want to know more about the sessions and when it's happening, you can join our WhatsApp group. And Richa has already shared her number. If you have any question, or if you want to have personal consultation with me, you can reach out to Richa or Rose in that case. Okay. So thank you, everyone. Thank you. Bye. Have a good evening.